Hello, today we're going to talk a little bit about jumbo loans in San Bernardino. Homebuyers that have questions can visit us at jumbomortgagesource.com or call us 7 days a week at 1-800-962-0677. First, we want to identify the differences between conforming loans and jumbo loans and talk about the loan limits. Currently, as of 2020, the conforming loan limits for San Bernardino County are $510,400. This applies to one unit, single unit properties. Keep in mind that multi-unit properties, 2, 3, 4 unit properties, the loan amount limits do increase, and all of the loan amount limits can be found on the website. It's important to recognize also that other counties, actually many counties in California, like Los Angeles County, San Diego, San Francisco County, the conforming loan limits are much higher, in some cases up to $765,600. Now, any loan that exceeds this amount, this conforming loan limit amount, would be considered or classified as a jumbo loan. Jumbo loan requirements are generally a little bit tighter than conventional or conforming loans. In most cases, jumbo loans require a little bit higher credit scores. The credit score requirements really depend greatly on the down payment that the home buyer chooses. In most cases, though, 700 credit scores will be needed for the high loan to value jumbo loans, like the 95% financing or 90% financing. And then credit scores a little bit lower, down in the 600s, often can be approved with down payments greater of maybe 15 or 20% down payment. The jumbo loan requirements that we'll look at apply to primary owner-occupied single-family homes, townhomes, and of course select condominiums. All the programs do require full income and asset documentation, just like any conforming conventional mortgage or government loan. Home buyers do need to document their income with tax returns and W-2s or W-2s if they're regularly employed, along with asset statements that show sufficient assets to close. And these requirements do apply to both purchase and rate and term refinance. Cash out refinances are also available for qualified buyers doing jumbo loans. But generally the cash out refinance requirements, the loan to value limits will be a little bit less. These jumbo programs offer, of course, both fixed rate and adjustable rate terms, all your common adjustable rate terms like a 5-year ARM or 7-year ARM, and of course 15, 30-year fixed mortgage. And most of the options do not have any monthly mortgage insurance or PMI. Most cases for the loan to value over 80%, in those cases a lot of times buyers do a combo first and second, or a piggyback loan is what they call it, and in often cases that's the way to prevent paying monthly mortgage insurance. We'll look a little bit at the jumbo loan amount and the loan to value overview. For the 95% financing, that's available for, again, qualified buyers up to $2 million. Generally, a 700 or better credit score will be required. And it's important to keep in mind that the credit score requirements do not guarantee loan approval. Just on that, there are other requirements, stipulations, and waiting periods in place for buyers that may have experienced a financial hardship in the past, like a recent bankruptcy or foreclosure. Again, these programs are full documentation, no monthly mortgage insurance, and there are single loan and combo loans, 80-15 combo loan options available. 90% financing, that's available up to loan limits to $2.5 million, and then 85%, you can see there that's even greater loan amounts over $3 million. Generally, those will require a little bit greater credit scores and more reserves that are required also. Reserves are basically the amount of assets that are documented after the closing costs and the down payment are made. A lot of the jumbo loans may require anywhere from 6 months, maybe even up to 12 or 18 months in payment reserves. And again, that's just showing that you have sufficient leftover assets after the down payment and the closing costs are made. And the reserve requirements can oftentimes be satisfied through non-liquid accounts, like a 401k, maybe a retirement account, an IRA. Those oftentimes will satisfy the reserve requirements that lenders have. Many more jumbo mortgage options are available for vacation homes, second homes, and investment properties. Of course, the investment properties generally will require at least a 20% down payment on the jumbo side, sometimes even more. It just depends again on the final loan amount and the credit profile of the borrower. That's a basic recap. Anyone, again, that has questions can visit the website at jumbomortgagesource.com. There's a wealth of information on the website. Give us a call 7 days a week at 1-800-962-0677. Thank you.